Japan's finances were already a mess before Friday's earthquake and tsunami. Now the country faces an even bigger battle to control the mounting government debt because reconstruction will be costly and investor confidence is at risk. For more on the future of Japan's economy and borrowing power, we welcome Thomas Byrne, who is the Senior Vice President for Moody's Investor Service. He's in charge of credit ratings for the major East Asian economies, including Japan. Tom, welcome to the show. Let me ask you this question. Moody's currently rates Japan AA2. Is that credit rating at risk?
Well, we have a negative outlook on the rating, so we are concerned about the when we put the negative outlook on in February, we were concerned about the long-term credit dynamics, whether the government could continue to fund its deficits at such low costs.
And what do you think now? We have an earthquake, we have a tsunami, and we have a nuclear catastrophe underway. What kind of risk do you see for that credit rating? AA2. Look, Japan historically has been a fairly stable credit. If Moody's was going to downgrade Japan, one would think it might go one notch, perhaps two notches. Are you thinking that if Japan is to be downgraded now, it might be a multi-notch affair?
Well, that's premature to speculate on that. First of all, you said Japan's finances are in a mess in the introduction. It's a paradox, actually, because Japan has the highest level of debt among the advanced countries, but yet it pays the lowest amount for the debt. The yields on the JGB are the lowest. They've been stable. There's a safe haven quality to them. And that's what's really keeping this going, the ability of the government to run deficits. They didn't always have large deficits. They did reduce the deficits before the global financial crisis. That completely knocked them off track, and they're trying to get back on track. Obviously, the earthquake, the tsunami, the ongoing nuclear problems will make that a lot more complicated.
Well, clearly, Tom, as you know, Japan's ability to continue borrowing at such low rates requires confidence among domestic Japanese government bond investors. With everything that's happening in Japan right now, do you think that's at risk?
Well, you know, these are fast-moving events. The earthquake just happened Friday. As of yesterday, the bond yields had actually tightened. So this safe haven flight to the safe haven aspects, the home bias aspects, are still, I think they're still in play in Japan.
Okay, foreign investors, however, are pricing a Japanese government or sovereign risk a little differently. You've probably seen CDS spreads, the credit default swap spreads, I wouldn't say blowing out, but rising significantly, 25 basis points. Japan is now considered in the international credit derivatives market the same kind of risk as South Africa, Colombia, and Brazil, all rated well below AA2. Is that a misperception, in your opinion, or have they got it right?
Well, it's the CDS market is not a deep and liquid market like other markets. There are idiosyncrasies to it. I think the good thing about Japan is at least it doesn't have this vulnerability to finicky foreign investors, say, unlike other countries whose debt is largely held by external creditors. That's not the case in Japan. Only 5% of the huge amount of JGBs are held by foreign investors, and probably a good share of those are central banks who, would behave very conservatively, we think, in holding JGBs.
Tom, look, I understand the role that Moody's plays, and you understand it far better than me. I know that you're reluctant to make strong statements about the future of Japan's credit rating, notwithstanding my efforts to push you in that regard. But let's try to answer this question.
Right.
Are you more concerned about Japan's borrowing ability, about the solidity, the prospects for that credit in light of Friday's events and the unfolding nuclear situation?
Let me answer this in two-step answer. First, we were concerned that the government and the political parties were not acting in unity to fashion a long-term solution to Japan's debt problem. Okay, the earthquake, the consequences of the earthquake, and this unfolding nuclear problems will just make things a bit more complicated. Let me just put it that way. There'll be more debt. Budget deficits will be higher than they initially expected. So the long-term effort will become more difficult.
And a more difficult long-term effort translates into what from a credit analyst's perspective?
Well, it's really too early to see exactly, in number terms, the extent to which government debt will increase, the amount of government funds that will have to be used for the earthquake reconstruction and the containment of the nuclear problems. Our benchmark has been the Kobe earthquake, where it was about 1% of GDP that government funds directly used for reconstruction. Total economic damage costs were between 2 and 2.5% of GDP. As more and more information comes out, that benchmark looks conservative.
Okay, Tom, thanks very much. Tom Byrne, he's the Senior Vice President at Moody's. He's responsible for East Asian credit ratings, including those of Japan.